Perfect. Good morning, everyone, and happy New Year for Ethiopian New Year. It's going to be 2018. I know it is weird. There will be some other day that we will talk about that, why it is 2018, it's not 2025. But today, we're here on Wednesday talking about real estate. And if you don't know me, my name is Ida Tazara. I am a licensed real estate agent in the state of Minnesota with Coldwell Banker and affiliated with Gojo Realty. And plus, I manage property in the state of Minnesota. And what else do I do, Peter? I do commercial. And any commercial property that you're looking for to buy or any kind of information, I am your girl to get a hold of me. Any state you're in, we are here to support you. I will hand out the mic to Peter, and Peter will explain to us who he is and what he does. And while you're doing that, please tap the TikTok screen and copy link as well. Thank you so much.
Yep. No, nice to meet you guys. My name is Peter Jerf with Custom Made Mortgages. We are only licensed in the state of Minnesota. And a lot of, like I always say, disclaimer, everything we talk about is in general terms. Again, no quotes. We're not doing anything like that online here live. So this is speaking in general terms. This is meant for education, not for, if you think of it more of an education role than like a work role where we're quoting you rates and things like that. So, but this is to help understand the process. Today, I think we're talking about, we're talking about interest rates, which is a very big, deep hole that we can go down in many different regards. So we're like the state of Minnesota. Nick might be joining us this morning. I'm not 100% sure. I think he's in a meeting right now. But he might join us a little bit later. But so excited to talk about interest rates and mortgages and real estate and all the fun things that go with that.
Perfect. Yay. So I literally got 18, 19 calls last week. People are like excited to refinance or to buy property because of they think like, it's a huge change with the interest rate last week. So Peter, would you break it down to us? What is interest rate and how that work for people that was buying at this point of the time?
Yep. So interest rates in very general terms, because we can get really technical, but interest rates in general terms is the cost of borrowing money. So if I want $10,000 and I don't have it, I can go to Ida and say, hey, I want to borrow money from you. And she'd say, okay, well, obviously, if I give you the money or borrow it to you at 0% interest, so I'm not charging you anything, what am I getting out of it? I'm not getting anything. You might take the $10,000, you might pay me back. What is the term? You're going to pay me back in 2 years? And then, so she's like, all right, I'm not going to make any money off that. How am I going to make money off of this? Because I'm losing this. Now I don't have it to use for myself. So there's many different ways that come up with what the interest rate will be. But we could agree, she'd say, okay, pay me 5% interest. Or there's another way to charge interest, which is like a lump sum payment at the end. Say, okay, pay me an extra $1,000 when you pay me back. So instead of paying me back $10,000, you pay me back $11,000. That's a total, I guess, that's kind of a one-off. But yes, simple terms, it's the cost of borrowing money. I got to keep this short. So cost of borrowing money. The history of interest and charging interest goes back to the ancient times. Same thing. People needed something. Some people have extra. Some people don't have that. Or they might not even have extra, but they want to make money off of it. So they're going to lend it to somebody who does, who needs it, who's going to pay them for it. So then they can make more money. That's where we see the banks. Lending is not a nonprofit. So they're not doing this to help people. They're doing this to make money. So that's a big thing to remember too with interest rates and paying interest is this is a business. This is not a nonprofit here to help you get ahead in life type of situation. And that's also because there's a lot of risk involved. Not everybody pays back what they owe, and not everybody pays back on time what they owe. So if you lend out money, $10,000 to 10 people, it's highly likely that at least one of those people will either struggle to make a payment or will completely stop paying you. And then you're going to have to try to go through the courts or whatever other system to get that money back. So all those things are factored in. And so when it comes to like mortgage interest rates, and I don't know if you want me to go into this yet, Ida, but stop me if you want me to. But
that is actually my second question, because I know a lot of people know what is the interest rate is, what is why they're paying, borrowing and all that kind of stuff, right? That just a penalty borrowing money that you don't have. But anytime when the interest rate goes from, let's say, 7.2 to like 6.8, people get excited. But they don't know the calculation that is not much a saving to start with that little number. I learned it because I have done it so much to the point that I'm like, I asked you, I'm like, what's the difference between this interest rate and that interest rate? So a lot of people, they just don't have no idea. They are sitting and waiting to purchase their investments by thinking that, interest rates is going to drop. When it dropped like, 0.2, 0.3%, they get so excited thinking that it dropped too big that they wanted to jump on. And then in addition, I was talking to someone yesterday, their credit card interest rate, it is 29% and 27%. But they just don't see that part of it. They just see this, what the market, the politician, the whatever is talking about. So it just, if you can explain to us that, how did that affect, if there is like 0.2, 0.3% is drop, is it a huge change in their monthly payments?
So the simple answer to that is it all depends, which is kind of the theme with interest rates.
Yeah.
So everybody's interest rate, we've had clients, Ida and I together, that even were friends. They worked in the same position at the same job. And from their viewpoint, they had very, very similar lives. Now, again, I can't tell one person, hey, this is the situation with so-and-so, and tell the other person this is the situation with them, because that's private information. But they both bought through us at similar times, and they got different interest rates. And so obviously they talked, and one of them realized they had a higher interest rate than the other one. And they weren't a big fan of that, and was asking, why is this the case? So again, interest rates are based off of risk. We think of it, hey, I want to buy a house, the bank should give me money. I've had a lot of people tell me that specifically. They should give me the money because I'm going to pay them.
Yeah.
So the bank doesn't know us. The lenders don't know us. So it's not, if you go borrow money from your brother, you guys know each other pretty well. That's a totally different situation. If you're going out into the world and you're saying, I want something, money in this case, then the world sets the price. So there's many different levels of even lending, because again, it's based off of risk. That's the big thing the banks care about. And if you were, the thing I always tell people is put yourself in the shoes of the lender. If you had $1 million to give out to lend, you had extra money, you decided, I don't want to put this in the stock market, I don't want to put this in Bitcoin, I want to put this in, I want to lend this out because I think I can make more money, because that's usually the other thing is, which one is going to give you the most money? Mm-hmm. Some people think, hey, if I buy Bitcoin, I'm going to make about 2% a year. Other people might think it's 20%. There's all these different valuations, which again, that plays into interest rates. So when it comes to borrowing money, it depends on both the internal and the external. So the internal is more what's going on in the market. The external is the client, us in that case, or you. So they're going to look at what's going on in the market, and then they're also going to look at your financial profile and look at what value it has. Now, again, this isn't your value as a human being. This is your value from a purely financial standpoint. And so they're going to look at, one universal thing that has become really big in the United States since it came out in the late 80s is the credit score. Yep. So it's imperfect. There's a lot of criticisms of it, rightfully so, but it's one metric that is supposed to be as even across the board as possible. It doesn't take into account other factors such as race, gender, anything like that. It just purely looks at finances and tries to cut out all the rest. The other thing is, a big part of what's on there is your borrowing history for the last 7 years. Yeah. So if you've paid all your bills on time on credit, everything you've owed, you've paid it back on time or paid it back early, you'll probably have a very good credit score. The other thing to look at is how much of the credit that has been given to you do you use? So if you have a credit card that has a $10,000 balance, is your balance or $10,000 limit, are you maximizing that every month, and your balance every month when it reports to the credit agencies is $9,999? Or is it $0 or $100? When it's very low, then it looks like, okay, you don't need that money because you have your own money. You've been paying your bills, so you don't need to take out that debt. If your credit card's maxed out, then, and again, think of this, put yourself in the shoes of the lender, because I think that helps a lot to understand it. If it's your money and somebody comes to you and you get a credit report and their credit score is 550, they have 2 credit cards, one's 5,000, one's 10,000. They're both maxed out. They've missed 50 payments in the last 5 years on their different accounts, on their car loan, their home loan, their credit cards. They have late fees. And then the other thing on your credit report too is it shows, 30-day late, 60-day late, 90, 120 plus. If you have 120 plus on there, it's like that's 4+ months that for some reason you didn't pay somebody back and you didn't have any sort of agreement with them or anything else. So again, if you were lending that money to somebody else and you realize, hey, you were lending to a friend and your other friend tells, hey, I gave Jim, $10,000 last year, and then for 5 months he didn't call me back and he didn't pay me. Are you going to want to lend that person money? So but again, being in, the United States, at least, we have many different options. So we have best case scenario, which are like your conventional loans. We have very good products that are backed by the government, like FHA, VA, USDA, those type of loans. But if you don't qualify for those, there's private lenders, and there's a different set of investors who buy that debt that'll say, okay, you don't qualify for those other loans, but we'll look at this from a different lens. But because it's higher risk, we're going to charge you higher interest because we know you wouldn't be coming to us if you could get that other loan, because that other loan is cheaper money. So if you want to come borrow from us and, last year you didn't pay Jim back for 4 months, but okay, now you told us, whatever happened, maybe you just totally ignored him, or maybe you had a life event. Maybe you went traveling around the world and you forgot to set up auto pay. Who knows? But the other thing too is if you're lending money and they don't know you, they're probably not going to fully believe, because there's no way to tell, is this person telling the truth or not? Yeah. So, and again, we have to treat everybody the same as well. You can't say, oh, well, this guy had a life event, so we're going to give you a better interest rate than Ida because Ida just didn't pay. Well, Ida might just be telling the truth. This other person might be making up some story to make it sound, like they were a victim. So that gets really wishy-washy, so they don't get into that. It doesn't really matter why. It just matters that it happened. So, for example, yesterday I got a call from an investor that we have worked with on multiple transactions. They own many homes, many investment properties, and they were calling me, one, about refinancing because they've seen the rates are starting to come down. And number two, and we've talked about this in the past, but I don't expect anybody to remember everything. But he was saying that his wife was getting a little frustrated because she felt like they had high interest rates on their loans. And also one of the properties that they had bought through us had an interest rate that was about 2% higher at the time than his sister, who was buying at the time. And we had talked about this as well. This is about a year ago, but he either forgot or, I know life happens. There's a lot going on. So this isn't the most fun thing to remember. So I went over it again with him quickly. And each situation had very clear indicators for why the interest rates they received were where they were. And actually, with the full context of that situation, the interest rates that he received were very, very good for the industry. They're actually better at the time than I thought we'd be able to get them. But we were able to get some good deals with one of the lenders that we work with. We were able to get some discounts on the rate, things like that. And so, but the context shift was very drastic, because if you, from a general public standpoint, because again, interest rates are kind of confusing, the rates that he got looked high. But when we applied the context of the situation, one, it's an investment loan. Two, it's through a private type of loan. That's not your regular standard conventional loan. The reasons for that was because if you own so many properties, you have to start financing a different way. And also because investment properties have the highest risk. So the lenders are going to charge that. And they also know you're using this property to make money. So to get back, to the full picture, interest rates vary a lot based off of your financial profile, the current market that we're in. Right now, the last, 30 years, the average interest rate is 7.75%. Most people will tell you, especially we've been talking to the last few years, who saw interest rates drop in 2020 through 2022, be like, oh, the current rates being around like 6 to 7%, 6 on the low end, 7 on the high end, depending on the situation. If you're refinancing, there are some deals actually with like FHA. You can get into the 5s right now. I talked to somebody yesterday. They're doing a 15-year FHA, and they can probably get like a 5.3% interest rate, somewhere in that range. But those still sound high versus, if their friend bought or they bought in 2022 and they got a 3% rate. The best rate I saw that I personally worked on was a loan that it was like 1.875 is what they bought it down to. It was a 15-year loan. They bought down the rate a little bit, but that was back in, 2021. And it was a refinance. Since then, the market has changed a lot. Conventional loans, especially if it's not your primary house, the rate costs a lot more today. Even if the interest rates were exactly where they were in 2022, if you buy an investment property today, the government or the quasi-government through the FHFA, they added what's called loan level pricing adjustments. And these have existed for a long time, but they've added a lot more starting in 2023. And the main things they were adding were based off of, just the amount they added was higher, but then also the situation. If you're buying a house to live in, that's considered, like food, water, clothing, housing, those are all considered basic needs. So they'll give you a better interest rate. And they've worked things out with risk and everything else to be able to do that. If you're buying a second home, there's higher risk, because now this isn't a need, this is a want. And so we're going to charge you a little bit higher interest, because we're not going to give you those benefits because you're going to live there. And also your credit score matters a lot more if you are a repeat buyer versus a first-time home buyer. And not to get too complicated and make your head spin, but another factor that goes into it is your income. If you make over, it's called area median income, we call it AMI, and you can look it up on Freddie Mac or Fannie Mae's website. You can look up, they have maps on there. You can put in Freddie AMI, and it'll come up right on Google or DuckDuckGo or whatever you use. And there's a map, and you can go right to your zip code and look and see what is the area median income in your area. If you make over 100% of that in your area, which in the Twin Cities is $131,700, you don't get those benefits. I don't make the rules. I'm just telling you what they are. If you make under $105,000, you'll get a better interest rate, possibly depending on the loan program, than somebody that makes $130,000. Even if you're both first-time home buyers. If you make under about $60,000, you can get an even better rate because there's a lower income product that will give you an even better interest rate. So income matters. One thing they started to do, but they took back, was also your debt to income ratio. If your debt to income ratio went over 43%, well, they were going back and forth on it. They never released it. But then they were going to add additional costs to that, which means you would have a higher interest rate than somebody that has less debt on their application. So it's very, and I don't have any, because I don't on TikTok. I was trying to create something so I could visually show it. I'm still going to work on that. And we're planning to put out a lot of content in the next 6 months on everything mortgage related, just from an educational standpoint. But all this to say is there's many different factors that go into the interest rate that each individual person gets. And then the other thing too is the lenders. I'm a broker. We work with many different lenders. So we can go shop around. We have a tool where we can shop around and get up to I think it's 260 quotes from different lenders based off of your profile. It's literally become a click of the button. Everybody, it comes back. It shows, all right, this lender, recently we found a lender that had a big discount going. So normally their rates would be about where everybody else was, but they have a big promotion going. So we were able to take our client to them, and they got an interest rate that was over 0.5% better than they would get with the other lenders. So that's the other benefit of working with someone like that. If you go to a specific lender, sometimes they can negotiate things as well. So there's pros and cons to everybody. But again, it's going to be based off of you individually, the market, the lender, the broker, everybody plays a factor into it. So there's not a lot of the famous, everybody calls, what's the interest rates? And you'll look online and you'll see, interest rate today is 6.3%. Usually they're estimating best case scenario. So somebody, I had somebody call me recently, they had 650 credit, and they were a repeat home buyer. So they're not getting the first time home buyer benefits. And, they're like, well, the interest rates online, I saw an interest rate for 5.75. And I was like, that's a real interest rate, but look at the fine print. And some of these websites now is really hard to find fine print. I know all of this, and it takes me 5 minutes to find it because they hide it somewhere else, or they hyperlink it to some other web page that you got to go to read. Some of that they're supposed to have on the same page, so I don't even know how, from a compliance standpoint, that's okay. Or sometimes the wording is extremely small, which my understanding is that's not supposed to be smaller than a certain print size. Anyways, and those are from the biggest banks, so it must be legal. But you'll look in there and they'll quote 5.5%. But if you look at the fine print, it says 2 points. Well, if points depend on the size of the loan, let's say it's a $300,000 loan. Well, 2 points at $6,000 because it's 2% of the loan amount. So you come talk to me, I'm always going to tell you, here's what your rate is without a cost. If you want to buy it down, you can buy it down. Here's what your monthly savings is going to be. Here's what the cost is going to be. And a big thing with that is you want to look at your break-even point, which a lot of lenders don't do. So if you're talking to a lender now or in the future, always ask for a buy down. Where's my break-even? And you also want to talk to a lender, a loan officer, who's going to talk to you, actually walk you through things. Because it's become very common in this industry for loan officers to become order takers, like we're working at McDonald's. They get on the phone, okay, send me your documents. All right, this sounds good, blah, blah, blah. Here's your interest rate. Here's the loan you should do. Good to go. That's cool, but really that's for us. It's really quick, really fast. Here you go, done. And some clients, that's what they like. I try to talk to them about this stuff and they don't want it. They're like, no, just give me what you think is best. I don't want to deal with it. And if that's you, sure, I get it. It's stressful. But I'm big on education. So I like to educate and we like to ask a lot of questions. Because if you're going to live in the house for 3 years or 30 years, We might give you a different loan product. Again, it's going to be based off of your priorities to help us find you the cheapest money. And your loan officer should always be trying to help you find the cheapest money. And sometimes, and this is going to, if we had 1 million followers, this would probably blow up the chat. But sometimes the cheapest interest rate is not the best deal. And the what I mean by that is you want to look at the full picture, because every lender in America, remember, you're coming into the lender's world. So if I go to your work, you're going to know more about it than I do, even as a client. Even if I go Google it and research it, and my friend's in it, and my other friend owns a company in it, and my other friend, whatever, you're still going into their world. So you want to make sure that you're working with somebody who's going to be transparent with you, because then you can vet them or prove what they're showing you. Exactly. It's very common right now. There's a big lender that I'm not a fan of, but I'm not going to say their name. But their strategy is to always add 2 points on every quote they give you, especially refinances. So you come to me, I tell you, hey, we got a great rate for you and get you 5.9%. Here's where we're at. You go to them, they're like, oh, you're at 5.4%. So obviously you're going to go work with them. But you didn't look at the details. The details show that you're paying $6,500 for that rate. You want to know that, because you could come back to me and say, Peter, what if we pay $6,500 for the rate? What rate can you get me? Yeah. And we can look at it. The other thing again is, do I actually want to pay that money to buy down the rate? Is that a good decision? So I know I'm kind of jumping all over the place here, but all that to say is the interest rates vary drastically as far as every single major factor that influences this. And even when it comes to like credit score, every 20 points can affect things. And the last thing I want to say, if you have any questions, Ida, the last thing I want to say before that is you also want to look at the loan products. Like I was mentioning before, one big question we get is people call me and they're like, I want to go FHA because it has a better interest rate. It does. FHA will almost always have a better interest rate than conventional. But the catch is FHA, you pay a government finance fee of 1.75% of the loan amount. Yeah. So your loan officer should be looking at both options and figuring out which, again, is the cheapest money for you based off your priorities. So we have a couple clients right now that their credit scores aren't doing great. They really need to get their monthly payment down. So they're actually switching from conventional to FHA. Usually you do the opposite. Usually you go from FHA to conventional to try to get rid of the mortgage insurance. They put down low down payments. They bought recently, so they don't have 20% equity in the property. And like I said, their credit scores dropped, and FHA is great for lower credit scores, especially when it comes to repeat buyers or refinancing. So like one of them, if they refinance conventional, their interest rate will be in the 7s because their credit score is not great. If they refinance with FHA, their credit score will be 2 points lower. They do have that finance fee, so we have to factor that in. But overall, even if they'd have to pay like $25,000 to get the same rate for conventional as FHA. The finance fee is like $5,000, and they can roll it into the loan, so they don't have to pay it at closing. So their priority, lowest monthly payment. Lowest monthly payment will not get you the best savings because you're usually stretching out the debt over a longer period of time. But if you need to get your bills down and you're like, I need to get my payment down as much as possible because we're struggling right now, then that's the priority. If you have great credit, you have a lot of money saved up. I had another client conversation with somebody yesterday. They call me. They have about $90,000, $80,000 to $90,000 that they want to put into their mortgage. And they're looking at either refinancing or recasting. So like, what kind of rate can I get? We're talking about 15-year, 20-year, 30-year loans, all those kind of things. So they're in a very different situation. They also have 800 credit. So every situation is going to be different. And the biggest thing I would say is you want to go to somebody who's transparent with you and can show you their work. That's the biggest thing I can say, because it's really hard to tell you, like, obviously I think I'm a good loan officer and I'm slightly biased about myself, but nobody knows every loan officer out there, and loan officers are salespeople. So they will try to tell you whatever they need to tell you in general because they're trying to make a sale. So you want to find somebody who's been, they don't necessarily even have to be doing this a long time. I used to think, the loan officer that's been doing it for 40 years knows way more than the loan officer that's been doing it for 3 years. That's, I'd say, true more often than not, just because they've accumulated knowledge. But this industry is always changing. And what we were doing in the last cycle with refinances, the way the rates are calculated are different. The way you qualify is different. To get them closed is different. Like, the rules change all the time. Yeah. So you really want to work with somebody who's constantly staying up to date. They're staying educated. And again, they're transparent with you, because if you want, I will give you the nitty gritty down to the last detail. And Ida knows this about me, how everything works. And I'll lay it all out there for you. Usually when I do that, when people request that, I do it, and then they're like, wow, this is too much. This is like making my head spin. All right, well, let's dial it back. I don't want to get that detailed. But I'm totally willing to do that. And you should work with somebody who's willing to do that and put in the time. Because that's the other thing in this business. If you think about it from a purely business standpoint, if we help 10 clients this month and we make $1,000 off every client, that's 10 grand. If we help 100 clients, that's 100 grand. So let's get through this as fast as possible. That's great from a business standpoint, but you want to take care of yourself and advocate for yourself. Same thing you want to do in the hospital, right? My wife is a nurse. She works in the hospital. She's always telling her clients, advocate for yourself. Have a family member here when the doctor's here. You have to stick up for yourself. The doctor's not going to come in and be like, you should really, ask more questions about this, this, and this. No, they have rounds. They have hundreds of patients to go see. They're not going to sit down and say, you really should dig into this more. You really should question me on why we're making this decision. No. And, every profession, even doctors who are not salespeople, anyways, yeah, I'm not going to make that comment. Aren't salespeople.
Keep it. Yeah. Perfect. So, let me tell you guys, the stuff that we go through every day. I spend 4 to 5 hours a day explaining what is this, what is that, what is this. So the reason that actually I came on TikTok or any of the social media, like the YouTube and all that kind of stuff, because the question that comes out, because a lot of us, we don't know how all this process is going. So that's why we don't want it to repeat the stuff. So whenever you need any information, guess what? I have it in my YouTube account. You guys can go. I'm not really making any money out of it, by the way. This is just an informational bank that I call it, because anytime when someone asks me a question, I just send them the link right now, because it is not worth it for me to just spend all this time to explain detail about certain things about real estate, right? So right now, you guys are getting a lot of good information. There are like 30, 20, 80 people were just going in and out in this TikTok and my YouTube account too. I really want you to help us to tap the screen, that people that who wants to listen what you wanted to listen right now for free, that it can get to a lot of people is a red eye. If you guys can tap the screen, at least push it to 25 to 30. I was so impressed this past Sunday. My tapper was close to 89. So I think you guys can help us. I have seen Matoma is doing most of the live sharing and tapping the screen. He asked me to reverse it to mine, because if I put it on Peter, it will stuck. He cannot tap it. So I flip it to mine. So please help us to tap the screen, that it won't stuck. And also it can go to other people's view, whatever they call it. So that is a good thing that you explain detail about the FHA and conventional. A lot of people see that, like I said earlier, interest rates is low they wanted to go with the low interest rate because they don't know what is coming with it at the end of the day. So another thing that I really want you to explain to us for 2 to 3 minutes is, Peter, a lot of lenders and also new construction, new build are giving out adjustable rate, the ARM rate. So if you remember 2008 and 9, a lot of people getting an ARM rate was a 5 years ARM rate, 7 years ARM rate, and all that stuff. And a lot of people who got that rate, what happened to them? They foreclosed their property because the interest rate, as soon as that year that they signed up, let's say for 5 years, if that 5 years is expired, the interest rate will go jack up. So, and if those buyer, if they did not have enough income or there is something happened to them, guess what? They cannot refinance that property. So they're going to end up losing it. So I really, 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 really recommend you. This is me. As you guys know me, who am I? I am a real estate agent who is helping buyer to buy property. I don't do mortgages. But if you ask me my personal question, either will you take adjustable or fixed rate, I will do fixed rate. Then I can control over it, right? But if you can explain to us, Peter, what is a fixed rate and versus adjustable rate? And I think I have someone that who requests to come. I will put him in. He just sit and wait and until you answer the question. And in the meantime, audience, please tap the screen and push it to 20 to 25. I will put you mute, okay? Go ahead, Peter.
Yeah. So when it comes to adjustable rate versus fixed rate, adjustable rate usually has a short term. Anywhere can be as short as a year, usually 3 years. Usually 3 years, and it can be up to, technically it could be up to like 20 years, but most loans in the US are usually between 3 and 10 year initial term. So during that initial term, you get the interest rate that you're being quoted. So again, just making up a number, let's say it's 6%. So, and let's say it's a 5-year, 5-1 ARM. So, well, I won't get too much into the terms and the specifics, but it's a 5-year term. So you're going to have that 6% interest rate for the first 5 years of payments, the first 60 payments. The 61st payment, then, after that 5 years, they're going to adjust to the current market. So if the interest rates have changed, and again, in 5 years, the interest rates will definitely change. They change every day, sometimes multiple times a day. It's going to adjust at scale to what the current interest rate is. So if the rates go down, your interest rate could go down. That's one of the positives that people don't talk about a lot, but it could technically go down. The scary part, or the issue that a lot of people got into in the 2008 great financial crisis, as they call it, is the interest rate went up. So after that term was up, interest rates were higher than when they originally locked the loan. And so in your loan terms, if you do look at an adjustable rate mortgage, or an ARM as many people call it, you look at the terms in there. So if, let's say, the interest rates were 6 when they locked, and then 5 years later, 5.5 years later, it starts going up, the interest rates are at 15%, like it was in the 80s, 17%. It's not going to jump overnight from 6% to 15%. There's regulations against that because that would be such a shock. But usually the terms show it can go up 1% a year, or 0.5% every month, or whatever the terms are of that loan. So, well, yes, it won't go from 6 to 15. Over the next 3 years, if the rates are high, it could go up, let's say it goes up 1% a year. So the first year it goes up to 7%, second year it goes up to 8%, then third year it goes up to 9%. Now all of a sudden you have a very expensive mortgage versus probably what you had in the past. Your payment has gone up drastically, and now all of a sudden you're struggling to pay your mortgage, especially if your property tax have gone up and your home insurance has gone up as well. So those are the issues that usually come up with the ARMs, or the adjustable rate mortgages, is after that initial period, then your interest rate adjusts to the current market, and nobody has any way of knowing what the current market will be. And also, like Ida said, refinances are not a foregone conclusion. You can't just say, oh, I own a house, so I get to refinance. Refinance is paying off your old loan. And this is a big thing about refinances that people don't get. I have people that have owned many houses and refinanced dozens of times, literally, and they told me they didn't know this. And I don't know how their loan officer never explained it, because they're a highly educated person and they're very smart. But you're paying off your old loan and opening a new one. You're not going in and saying to the same loan, all right, we're going to change the interest rate from 6 to 5.5 or anything like that. You're literally, when you close, you mail a check to the old lender, or the title company does it for you. And then the new lender gives that money to secure that property for you. So it's a totally different loan. You're paying off the old one. And so it's like, if I pay off Ida and then I go borrow the money from my brother Nick, that's what a refinance is. If you're actually changing the terms, that's a loan modification. You're modifying it. And you have to go back to the same lender, and you usually have to have a hardship, and that's a whole different process. And that's not the standard way to go about getting a better rate or anything like that. That's for hardships, and they're not even always going to approve it. I know somebody right now going through an assumption, it keeps getting denied, even though they have a very good reason for it. So that is also not a foregone conclusion that just because something bad happens, the lender is going to work with you. They only have to work with you to the extent of the law, and the law doesn't guarantee that they're just going to let you keep missing payments or not making the full payment or anything like that. So going back to the fixed rate means it's going for the entire term of the loan. So usually, at least when you purchase, most people do a 30-year loan. So if you do a fixed rate, it's fixed for 30 years. So if you get a 6% rate, if you never refinance, your rate will be 6% for the full 30 years, all 360 payments. Every single month, you'll pay the same amount for the principal and interest. It will not change. If you refinance, again, whatever the refi is, that's what you can do. The ARMs do get a lot of hate, and I'm not a big fan of them. Obviously, the client, you get to decide what you want to do. Our job is to educate and help guide you, but it's your, help you understand the pros and the cons. But the benefit to the ARMs recently is sometimes there have been, because they're priced differently. So not to get into the weeds, but ARMs are usually based off of different pricing mechanisms for the rate than a fixed rate is. So recently, ARMs, about a month ago at one point, FHA ARM rate was about 0.5% lower than an FHA fixed rate. So we don't do a lot of ARMs. If a client comes to me and they're not super financially savvy, I usually advise them, I'm like, unless you know you want an ARM, I probably wouldn't go that route, just because the extra risk, like Ida was saying, 5 years from now, you might lose your job or something bad could happen. And now you can't refinance out of it. Now your payment skyrockets, and now you're stuck in a bad situation. You might be losing your house. Nobody wants to be in that situation. So I usually advise only experienced investors or people with a lot of money to use those products. Now, again, you're the client, it's your decision. I can't control you, but that's what my advice is. And the reason why I say a lot of money is because, and I'm talking about, good chunk of money where they can just go pay the house off if they wanted to. So I have that one client, he makes a lot of money. He's got a lot of money in the bank, all these different things. He wanted to go with the ARM. He wanted the better interest rate, so we did it. The other FHA clients I had, they didn't want to take the risk. Totally understandable. And again, that didn't stick around for long. The ARM rates are a little bit better than the traditional fixed rates right now for some products. But again, is that risk worth it? That's a good question that you want to really go through with your loan officer in detail for your specific situation. Your brother might be a great product. Your coworker might be a great product. You might be a horrible product. So you want to use the context of your situation again. That's like the biggest thing in all mortgage, all real estate that I have to say is what specifically to you is the best decision. And again, cheapest money. Because if you plan to move in 4 years and you get a 5-year ARM, you're like, nope, 4 years, I know I'm retiring. Ida and I had a client, well, it was her dad a few years ago, but he's like, he was looking at refinancing, but he's like, nope, in like 10 years, I think he said, I'm going back to the country that I originally immigrated here from. I'm going to sell the house. There's no way I'm going to keep this. So if I refinance and I get a 10-year ARM, I'm not going to worry about it because I know I'm going to be gone. Okay, well then that's why your lender should also be asking, how long do you plan to live in this house? How long do you plan to own it? How long do you plan to have the mortgage? These are all important questions that a lot of times loan officers don't ask because they just take your application, plug it in, and it's done. Yeah. So, or they try to talk about it and then the client doesn't want to go through all those details. So that happens sometimes. And then last point I just want to add is there is something called temporary rate buy downs that came out the last few years. Mm-hmm. That is usually for a fixed rate loan, but you can buy down the rate for like a year, 1 to 3 years. And that means you're putting extra money up at the closing to get a lower monthly payment. So it's not a true savings. It's just saying, hey, I have extra money and I want my monthly bills to be lower. So I'm going to put forward a chunk of money. The real time when they really make sense or they're valuable is if you're getting a credit from the sellers, like the builders. The builders, it's a big product with them. They're like, we're going to give you a 3-2-1 ARM. Your first year, your interest rate is going to be 2.999%. Second year, it's going to be 3.999. Third year, it's going to be 4.999. And then after that, it's going to go up to 5.999 for the last 30 years, or for the remaining term of those 30 years. And the way the builders do that is there's a couple different ways, but the biggest one is they buy what's called forward commitments. So they buy interest rates ahead of time, basically. So that's how they get those low interest rates and are able to offer those things. And they beat everybody. And they're offering what they've been offering in the last few years. I think last year we lost more business than money I made off of new builds because there's so many good deals. And we cannot tell clients, you don't take the benefit because we want to get paid. So we have to put your best interest at heart, and we have to tell you, all right, well, take that. I always tell people, I'm like, well, use it. And if you need to refinance, call me. But that's how the builders were able to give such good rates. And like that client I mentioned who called yesterday, he brought up that his sister bought a house. She got a rate in the 5s. His investment property that was a private loan was in the 7s, even though they both had 800 credit. And so that was one of his questions. Why is she getting a rate that's 2% better? Well, the builder probably lost tens of thousands of dollars on that rate. Mm-hmm. But they're making a lot of money on the whole transaction because they're selling a $750,000, $800,000 house. So they can afford to it's a sale, in sales, you got to look at the pros and the cons. If they're making $100,000, they can afford to lose $15,000 on the rate. We don't make $100,000. We're never going to make $100,000 on a loan. So unless we're doing like huge commercial loans in the hundreds of millions. So yeah, but I'll stop going off on that tangent. But yeah, so you have ARMs, which adjust after a certain period. You have temporary rate buy downs, which are usually a fixed rate, but you buy it down for a year or 2 or 3. And then you have a pure fixed rate, which is usually for the full, it is for the full term. So if you do a 15-year loan, it's for the full 15. You get a 30-year, full 30. A 17-year loan for the 17, and so on and so forth.
Yep. Perfect. Can you hear me? I muted myself earlier. Okay, perfect. Yeah. So that is the explanation that I was needed for the fixed and adjustable rate, because everybody is like really focused on interest rate, but not focusing the actual investment that they can do at buying their own home. So I hear a lot of people are like, oh, interest rate's going to drop. I'm like, it's going to drop. But if it's going to drop, it's going to be hard on the American economy. So they are not going to be like, cut it just because. And the other thing is, if the interest rates drop, and then we're going to do again the war, winning a property that you wanted to buy. So because of that, they are not going to be just drop it everything. So what I can tell you So as I said earlier, if you guys are new, if you guys never been in this site or our TikTok live, we talk about real estate. Real estate, about anything about, like, how we can invest on ourselves, what is interest rate, what's going on with the economy, what we can do, and all that. So every Wednesday we come here and we literally trying to focus and help the community about mortgage, because I am not licensed to be a mortgage broker or a loan officer. Peter is, so I cannot talk about mortgage. Every Sunday we talk about real estate, buying, selling, this and that and this. We talk about a little bit about mortgages when we have, a little thing that I know I will explain to you guys. But beside that, we'll have usually like Matoma or Maaza or Miki. They usually come here and, help us to understand what's going on out there. But right now, in the real estate part of the business, what I do in a consistent and every day, this week, last week, next week, we have closing back to back. I had a cash buyer who purchased his beautiful property yesterday. I put it on the TikTok, on my Facebook page and all that. Go ahead, make some comments, say congratulations to the buyer, because he is, tag on that thing. Just support the video that we put out. It would be good that it can go to other places. And also, I put those things on the social media because I want you to think that you can do it. I am your person who will motivate you to go and invest on yourself. And if you invest on yourself, if you don't have kids, guess what? When we go to a nursing home, we have someone that we can hire to change our diapers. I'm sorry to say this thing because we're in the US, okay? If you're planning to go back home, that's another thing. And if we have kids, then we have something that we can transfer to our kids. So to be honest, none of our kids will go live back home. If you guys are from here, we are from Africa. I am from Africa. I'm from Ethiopia. So I don't think none of my kids will go back living in Ethiopia. They're going to live here. So what I can do, and I will do what I can to earn living. And me and my husband, we are purchasing property for our kids that, they will have something when we go. So with that said, push yourself, dream big. And there is nothing that you can do that will stop you to invest on yourself. So the biggest thing is for you to play your interest rate stuff, credit. Your credit matters. When you go back home, don't max out your credit card. And late fee. Some of us, we pay late fees. That late fee, it will drop our interest rate. So the interest rate that I will get with the 800 score and what Peter can get, it's totally different. If he is late on his payment, if he is late on his car note, car payment, and all that kind of stuff, if it is that reported in your credit score, if it dropped, that means what? You won't be able to get a good interest rate. So you're not going to get the interest rate that I get because I paid my stuff on time and my credit number is good. I don't maxed out my credit card. So I need you to think of those things. And another thing that we keep having an issue right now, some of us, we have, we in the process purchasing a property. You are like put an offer, got accepted, did your stuff is set, your appraisal is done. Then you guys go and open a credit card when you go to this furniture store because they will tell you that you're not going to pay this payment until next year with 0 interest rate. As soon as your credit card application process and they pull your credit, it will send information to your lender that someone pull your credit. And then if your credit score is drop, and then your interest rate will drop. We are having that problem on a consistent basis, and I am planning to make a video that all of you guys will understand that don't touch anything until you get your key. Once you start the process, until you finish and get your key, your home key, do not go and apply for credit card, car loan, being a co-signer for someone, move your money from one account to another bank account. All these things, it is not gonna be making you to close that deal. Last year we had this issue, and it was a horrible thing that I have seen. Our buyer became a homeless because they think like they were planning to buy this house. They already give their apartment building a notice that they are moving out. So it was a hard thing to see with our buyers going through this thing. We send out an email, do not do this thing. Don't do this thing. I send out a message, but some reason they just do it. Just because their friend told them that, oh, I did it when I purchased my house. So don't get information from your coworkers, from your friend, for a family member, from whomever, because those people are not what? Licensed real estate agent or a loan officers. So your situation might be different than the person that who's telling you what they're telling you their story. So when I say don't do it, to be honest, we just had a client a couple of weeks ago. They got everything done with their credit. Everything was set and done. By the time we are about to put an offer, their debt, what they owe on their credit card, they won't be able to be qualified to purchase that property. And they lost that property. They loved that property. Their kids wanted to move it in that house. They were capable. But by the time Peter pulled their credit to send out a pre-approval letter as a new construction, new build property, guess what? They cannot afford to pay. They have to pay all those credit cards before the closing right now, actually right here, because their credit drop. So your interest rate matters with what? Your big credit score. Your credit matters. I don't care what other people tell you. Peter already told you that your credit matters. And plus the other one, your loan type and your down payment. So in the terms, if you're going to 30 years, if you're going to go to 20 years, if you're going to go to whatever, and the market condition. So as you know me, I am not a loan officer, but I was before Peter was a loan officer back in the days when I was in college. But now I am not. But I want you to understand this. A lot of people are so stuck on interest rate. They will call me like, hey, I saw the interest rate is this online. How come I don't get it? Why Peter don't get me that interest rate? I tell you what, talk to Peter, because I don't know. I don't know what you see. Screenshot it, send him the link, talk to Peter, because Peter is my number one loan officer. And I call him anytime he's available. I work 7 days a week. he work 24 hours. And I call him my 30-second pre-approval letter sender guy. I texted him, please send me for this property address for so-and-so. I need you to send me pre-approval. Before I get to my home office, I get it. So if you guys are loan officer here, or if you guys are here as a, you guys can say, like, if you guys are a loan officer, write me one. If you're a real estate agent, write me two. I wanted to know this kind of relationship that you have to do that. And in addition, you need a loan officer or a real estate agent that you're hiring. They should be providing you information when you ask, and also let them to be honest to you. So interview your loan officer. Always interview your agent. That's how you know that these people are willing to put their time and effort to help you out. So as you guys know, as a real estate agent, until you guys are closing your deal, I don't get paid. It's a commission-based job, business that we're in. My compensation is after you close your deal. So if your agent not explain to you what's going on, what they know, they will not explain to you about the interest rate because they don't know. They're not a loan officer. But all the time, your agent should be active and understand what's going on in the market. Right now, as you're someone that who is on social media and explain to you what's going on, in Minnesota, it's kind of changing to a buyer market. There's a lot of properties are sitting in the market. There are a lot of properties are were priced higher priced, and they dropping their price. So there is a lot of benefit for people that who's buying this year so far right now, because we were supposed to be busy usually June, July, and August. It was kind of cooling down. Me and Peter still we close, 2 to 3 a deal a monthly basis, but a lot of sellers price their property high and they're expecting to make money. They are deciding pulling their property back up, take it out of the market, or they're dropping the price and selling them. So you have an option, what? Closing cost, and then then the seller can pay your real estate agent. And as you guys know, the interest rates dropped a little bit last week. So it's a win-win. So if you guys are anywhere, any state that you're planning to purchase a property, I need you to be wise and understand the situation and jump on it. And beside that, you can add, Peter.
Yeah, I was going to add two things. One about what you were talking about earlier about using someone that is giving you good information. So the one thing I want to add about that is a lot of times Ida and I both see somebody comes to us, but then they, like she was saying, don't trust your coworker, your brother. I usually say it slightly differently because I don't want you to think that I'm telling you to just blindly accept what we're telling you, like we're God and you just have to just, listen. But bring those questions to us, and in a way that we can go over it together and learn together. Because Ida and I, the reason why we work so well together is we both like being transparent and honest with people. We want to be able to sleep well at night. We don't want to be screwing people over or lying to them just to make some money. We've both seen that's, in any type of sales job, there's people that do that, and there's a lot of negatives that go with that, and that's not what we want in life. So all that to say is find somebody that's good, that's open, transparent, and can explain things that you're comfortable with. Because if you go to if you don't trust the people you work with, you're going to have a problem. Because we've had clients like that all the time that, well, what about this? What about this? And there's different ways to say it too. There's one to say, hey, I saw this. Can you help me understand this? There's another to be like, my brother told me you're ripping me off. Well, that's a confrontation now. So we're still the professional. We're still going to try to like explain things to you. But if I came to you at your job and told you, oh, why are you doing it this way? My brother told me, or my friend told me you're doing this wrong. Like you're going to, okay, hold on a second. Like I'm just living life here and trying to do my best job and you're attacking me. Like, give me a chance. So, so I'd say come with definitely be critical. I'm that way. I check everything. I was telling people to, do your own research 20 years ago before it became popular. I'm glad it has become popular. I actually encourage people, go learn, but you want to learn in a structured way and you want to learn the right information because there's a lot of bad information, both from people trying to give you good information, but just not knowing. Kind of like if you came to me for heart surgery, I'll give you the best advice I can. But honestly, the best advice I can give you on that is to not take my advice and go talk to somebody who actually understands it, because I don't know enough about that. You're going to end up dead if you have me doing your heart surgery. That's just point blank. And so there's a lot of people online and friends and family as well. That's probably the most common one, friends and family. Hey, I had one guy, I own 5 houses. I know everything about this. He didn't know anything. That guy was clueless. Like, clueless. But he had a lot of confidence because he's done it before, but there was different reasons for that. And so eventually actually we were able to break down where his misunderstanding with what was going on with his brother. And I was able to explain everything. And he also at the end of it was willing to be humble and be like, you're right. Okay, I totally missed this. I should have been a little less aggressive, but I thought you were screwing my brother over, so I wanted to protect him. Totally understandable again. But that's where you want to work with people that will sit down and explain it to you, talk to you about it, and as a client, try to give us a chance, So if I'm BSing you and I'm talking circles around you, then you can kind of tell I'm not answering your question. Now, all of a sudden, the red flags go off. If it's a situation where it's just an education piece or a priority piece, because again, your priorities can majorly influence where you end up, what you end up doing as far as like financing, the loan product you use, all of those things. So, but again, you want to get with somebody you can trust because then they can guide you. And again, you should be able to, the whole transparency piece, you should be able to check it.
Yep.
Like when I give you information, I'll never send you something and be like, don't Google this, don't look this up, don't learn about this, because that just doesn't make sense. So, and again, if you do your research, like Ida and I just had a closing recently for a woman who she researched a lot and she kept coming back to me with questions. What about this? She was very nice about it. We had good discussions about it. And at the end of everything, I will always ask you, does that make sense? Do you have any other questions? I say that line probably more than anything else in my life, to be honest, to be honest, because I always want to make sure you feel heard and I've answered your question. I don't want to just talk over your head and then you hang up the phone and be like, I have no idea what he just told me.
Yep.
And ask me questions. That's what I'm here for. You're paying me. So same with Ida. Ask her questions, but try to work with us and then use us as the expert to help guide you along the process. And again, if something doesn't make sense, you can ask us, why are we doing this? And then we can tell you. But we have to have that underlying belief that we're both trying to do the best thing for you, as opposed to this confrontation of, I got to fight with my lenders and this and that. And there are some lenders that you do that. And the reason why that exists is because people have had that experience. I had a client come to me recently, about a year ago now, actually. But he came to me because he was pretty sure that his realtor and his loan officer were colluding against him. I don't know if that's true. I don't know them. But I do know the lender did a very poor job in explaining things to them and didn't want to spend more than 30 seconds on the phone. And it took them about a week to 3 weeks to get back to him every time they called him. So I was like, well, I know on that part we can do a better job. So I can help you with this. And your questions, I can explain everything to you. So no idea what the intent was. I'm not going to try to judge that. But if you're getting good quality service, people are giving you good information and showing you how to check those things, then use that person. Don't go use your brother who owns 3 houses. And again, if your brother says that doesn't make sense, ask him about it. Ask us about it.
Mm-hmm.
Totally valid. But find that middle ground. And then, because word of mouth is important. If you work with a good loan officer, you want to use that. If you work with a good CPA, your other friends and family might want to work with a good CPA. If good realtor that actually treats you well and is honest with you and doesn't try to get you into crappy properties so they can make more money or try to max out your approval. I have a new realtor, side note, that I've never worked with before on the buying side. He's actually worked with Ida and I on the selling side with the sellers. Can't get him on the phone. Saturday morning, I get a text, what's their max? So he just wants to max out their offer. The clients, I call the clients, they're like, no, we don't want to go anywhere near the number he's talking about. So I don't know how this is going to go. We'll see. It'll be interesting. But I don't have a very good vibe right now from this realtor because he's not on top of it. He doesn't communicate. He still hasn't called me back from 2 weeks ago. He'd only text me. I don't have a lot of details from him. It makes me really happy. It reminds me that Ida is great to work with because she does all those things. And so, and I kind of feel bad for the client too. But that's a fine line too, because you don't want to just create conflict, but say like, hey, we need this information. So let's stay positive and let's stay focused on the goal and let's get this, because it sounded like the client and the realtor weren't agreeing on a couple things, but I wasn't in that conversation. So I don't know. So all that to say though is, Ida said, interview your loan officer, interview your loan officer and realtor, and make sure you understand what's going on. Ask the questions. We can explain it to you. Try to work with us and don't, let's all have the right attitude. And you can have a very good experience, because that's the other thing. Roughly 75% of people say they have a bad experience with this, or they have a major regret.
Yeah.
One of our underlying goals is that you don't have those regrets. We don't want you to buy the house and 3 months later be sitting there and be like, oh man, I don't like the loan that I got in. Or you go back and look at your closing disclosure and you realize, oh, I paid like $6,000 for my rate. And I didn't even know I was buying down my rate. I thought I got a good deal. And actually my loan officer kind of snuck that in on me and I lost $6,000 on something. And we've talked about that before. That's a very common thing. The other thing with the fees, they give you a great rate, but there's a ton of extra fees in there. So, but again, you want a good expert who can guide you. And then that's the person you go to. Just like Google, you want to find something else, you Google it. You want to find something out about real estate, call Ida, text Ida, email Ida. Here's my questions. And then if you plan to do this long term too, like we always say, we want relationships for life. If you call us 2 years after, Ida and I have a couple clients, but they'll call us. One of them called me at like 7 a.m. because their gutter broke. Now, obviously, it's nothing we can help with, but at least we help. They're like, oh, you got to call this person, call the insurance, contractors, whatever. But we're still going to answer the phone. A lot of people in this industry don't do that. So you're paying roughly the same. Usually it's about the same to everybody. So work with somebody who's going to treat you well, guide you, educate you, and is going to treat you like a human being. So I know that was a lot longer than I meant to go, but I just wanted to elaborate on that part of it because I think that's key. And again, Ida and I are not trying to hide anything from you or rush you through the process, but also we don't know the question. And Ida laughs because I can talk forever about this, but if we answered every possible question, we would be sitting here for about 3 years before you bought the house because there's so many questions that can come up. So you have to be the one to assert yourself and say, I have a question about this. And so, we're going to try to help as much as possible. Again, just like I was talking about doctors, when the doctor comes in, if you don't ask anything, they're going to go over it quick, boom, on to the next patient. Same with us. You come to us, we're going to give you the info. We're going to go over it with you. You don't ask any questions. Especially when we ask, do you have any questions? Then we're going to go boom next. So, but if you have those questions, ask us. We'll sit down, explain it, and go forward. So, all right, I'm done. Sorry.
Good. No, it's good because the reason that we do what we do right now, like this, explaining to you guys what is this rate, what is that rate, and even though that I am on TikTok and I am live on YouTube, so if you guys go to like Gojo Realty or Aida Tezara, you can find what we just talked about. So you can get that information. It does not matter what state you live in. So you have a certain information that you will hold for yourself, take notes, and then you can take that information or question, you can ask. You know, you probably, if you're not in Minnesota, you won't be able to work with us, right? But you are going to be out of state, it's a different state. So if you are in different state, you check everything. I'm like, we talk about, if you go to in my YouTube account, it is over 30 different things that we talked about. So what it matters for you, you listen that. Most of them is an hour and 30 minutes, 45 minutes, 30 minutes. So you just can put it in your earbuds, whatever, or earplug or headset. You just listen to it. When you drive, and instead of listening music or whatever, you guys can listen that. So then have a certain question for your lender, for your agents. And then you'll be able to see who can answer you those questions. Another thing, you know, how I can interview my agent, right? And we're about to finalize the live right now because I have a 11:30 conference call. So I have a list of like 20 questions that I can provide you, and I can help you even finding some agents that you're looking for, whatever state that you wanted to purchase. We have a lot of agents that we work with. So, and then if you want to, I can be with you and ask those questions with you. But I want you to in charge on those questions. Then you know that you can see which agent that you wanted to work with. The same thing with the lender. What are the kind of programs that they have? Are they available Monday to Sunday? And this and that. So as soon as you figured out those things, that's your first stage. And then you go and figure it out, like all the stuff, what you need for being pre-approved. What are the stuff that you need to do? Even we talked about property that you purchased. What is the stuff that you need to do before the winter? Winterize. I have all that information in my YouTube. So Gojo, G-O-J-J, Joe. Oh, sorry, Joe. Oh, Realty. If you go in there, you'll find all the stuff. So with that said, Peter, do you have anything that you wanted to add on before we exit out?
No, I mean, biggest thing, just reiterating, if you have questions, ask your loan officer. Refinancing right now, be very careful because lenders, we make money, loan officers, we make money when you refinance. I used to be, my theory on it's changed a little bit, and I'm not going to go into this whole thing, but there is something that a lot of people call a free refinance or a no-cost refinance. Basically, what you do is you take a little bit higher interest rate and you get a credit back from the lender. Those are the ones that I would say right now, from what we're seeing, are probably the best type of refinance. But again, it varies widely from person to person.
Yeah.
But in general, those seem to look like the best option because your break-even point for paying for the refinance is very short. So you might not get quite as good of a rate, but if you refinance again in the next year or two, then you're not losing money. Because if you're paying all your own closing costs and you're buying down the rate right now, and the rates continue to drop like we think they will, again, no guarantee, they could go up, but we think they will, and you pay, I just did this for a client, if they paid their own closing costs, their break-even point would be over 2.5 years. Well, if they refinance in a year or a year and a half, they're actually going to be losing money on that transaction. So even though they're going from a 6.9 down to a 5.9 interest rate. So you talk to your loan officer. It's not free. People like to advertise it that way, but there is a way to do it so it doesn't truly cost you because you get an offsetting credit. Be careful if they're rolling the closing costs into the loan and your loan balance is going up. That's okay, but you want to be aware of it so you can weigh the pros and cons of that.
Yep.
So yeah, biggest thing is with refis right now, be very careful, especially if you're working with a big company, because in general, they're selling points. Everybody's telling us to sell points. I'm part of a group that has 19 guys that are people that have all been very, very highly successful, done over $1 billion worth of loans, all this stuff. And everybody's saying, well, everybody else is selling points, so you got to sell points. And I personally don't think that's the greatest strategy, and I can explain all that. But know what you're getting yourself into. Ask the loan officer to walk you through it because the refinances are coming back. They're becoming a very big thing. And weigh the pros and the cons of that. Break-even point. Ask them where your break-even point is, because that's a huge part of it. So yeah, same thing. And with real estate too. If you're going to look at real estate, the other thing I was going to say is buying. We have clients that are waiting for the interest rates to drop. Even with the rates drop, and we have a report that we can send you on this for free if you want. I can send it to you. Just hit me up on here or email or phone or whatever, showing even if the rates drop 1% between now and next year, with the usual appreciation or even the appreciation we've had this year in Minnesota, because the property values are still going up in Minnesota. Down south, not so much. Well, they're dropping. Minnesota over to New York, those home prices are still going up, and it's a different market. Real estate's very local. So make sure that you're looking at local news, talking to local experts, not talking and looking at CNN or MSNBC, because usually their news is old and it's not specifically to where you are. And it's usually based off whatever the worst case scenario is, because they like to scare everybody. So, but all that to say is all the greatest investors always say the same thing. Do not try to time the market. So, and they're experts. So if they're not trying to time it and buy at the perfect time when the property values drop and the interest rates, like that shouldn't be your guiding light, especially if you're new at this. So that's that. That's my last little thing.
Perfect. And would you let them know who you are and what you do, and then we can close our thing.
Yep. So Peter Jerf with Custom Made Mortgages. We are licensed in the state of Minnesota. If you're looking for lenders outside of Minnesota, we know some. I know IDA works with a few others that are licensed in most of the country because they're bigger. I don't know if any of them are on here, but you can always reach out to them as well. Loan officer, like I said, in Minnesota, we do primarily residential lending. So if you need anything, hit us up, and we will see you next week.
Perfect. Thank you, Peter, for always your time and effort, your energy. Sometimes I'm like, I don't want to deal with this customer. He goes like, Ida, let's go. We got to do it. And sometimes they get on my nerves and they sit on my head, and then, we work as a team all the time. But like Peter said, there is a Matoma here. You guys can follow him. He is a loan officer as well. And Mickey actually was here earlier. I don't know if he's still here, so he can say hi. And then you guys can follow them. They finance a lot of different states as well. So with that said, my name is Ida. I am a licensed real estate agent in the state of Minnesota with Coldwell Banker and affiliated with Gojo Realty. I am a team lead, and also I manage properties and I list or sell commercial property as well. And thank you so much for coming, all of you guys. And if you guys need any kind of information about real estate or loan or whatever, we are here to support you. And with that said, Happy New Year. And until Sunday, we'll talk more detail about stuff and question and answer. If you have any question, please DM me. We're going to do a lot of question and answer stuff on this coming Sunday. Thank you. Perfect.